traders and investors. This is Vishal from EQUITY.GURU, and a lot of things to talk about this week. Of course, the big data print was Wednesday's CPI data, but you have to think that markets now are not really thinking too much about inflation and interest rates, and maybe that narrative has shifted to possible recession and other headlines, which we will talk about here in just a second. And then once we do that, we'll do a roundup. We'll take a look at what I am seeing on the S&P 500, the Nasdaq, and the Dow Jones. We'll take a look at the U.S. dollar, the bond markets, gold, and the oil markets as well, to some interesting developments there as well. So first off, CPI for April, inflation rate eases to 4.9% in April, which was less than expected. For the month, we had a 0.4% increase, pushed higher by rising shelter, used vehicle, and gas prices, but the increase was in line with expectations. As I said before, inflation on an annual basis was 4.9%, which was less than the estimate. And for workers, real average hourly earnings adjusted for inflation rose 0.1% for the month, but we're still down 0.5% a year ago. So wages are not keeping up with the rate of inflation. Taking a look at the inflation rates here, both in the U.S. and in Canada, the blue line is the U.S. inflation rate, in Canada is red. We can see here that, yes, the inflation is, of course, dropping down, and it leads to this idea that central banks are succeeding, with their policy, right? Keeping rates high, bringing down inflation, nowhere near their 2% threshold level just yet, but it does look good with the inflation rate dropping down lower. However, there's one sort of little hiccup in the inflation numbers, and that is, the goods and core CPI is coming down, but the consumer prices are still are still coming up strong, and that is to do with service prices. So we're talking your restaurant meals, auto insurance, dental care, education, that kind of stuff. That is still surging, and central banks are saying that inflation is rising because companies have had to raise the pay in industries to find and retain workers, and also to survive the inflationary environment that's going around them. So something just to think about going forward is how do you bring that inflation down, right? When you have businesses and small businesses and all these other services raising their prices, are they all of a sudden going to decide to drop prices because things are back to normal? Very likely not, right? Once you have prices up pretty high, you're likely to keep them up there. But then again, something that could bring prices down would be maybe a more severe recession going forward, which would not see people spend money and would have to, in a way, kill demand to bring a lot of these prices down. But that's something we'll probably talk about, or will be the talk months from now, maybe a year from now. Some people might say even sooner. But right now the employment data still very strong in the U.S., which is leading to this. Fed keeps mentioning, right, the employment data, saying that the employment is very strong and robust, and it doesn't show any sign of any economic slowdown or recession. But we'll keep an eye out on the employment numbers, and of course, retail sales. So we have our inflation information out of the way. We've been talking a lot about banks and what's going on with regional banks, and they are still there in the headlines. You still have PacWest here. The shares tumbling 20% after regional banks says deposits fell 9.5% last week. So we'll keep an eye out on the banking, the banking headlines. I was going to say crisis. Some people might argue with that, but if you take a look at IAT, which is the iShares Regional Banks ETF, I highlighted this in the past with this range developing, and we said that as long as this range is still there, we can't go positive on regional banks, right? Until we get a breakout maybe above this range, we can begin to be a bit easy on regional banks, but instead we got a breakdown below, just indicating that this ETF still has some room to the downside, and we haven't recovered back above that zone from a technical level. So just applying technical analysis and how the spooky idea of how charts can sometimes foretell things that are coming, I would say that the regional banking headlines and maybe issues are not over just yet. So we'll keep that on the radar as well. And then, of course, now we are hearing about the debt ceiling and the debt default as the U.S. approaches, a debt default door, and the government has to come together to raise the debt ceiling. We heard Treasury Secretary Janet Yellen talk about how it would be devastating if no deal comes through. And now you're seeing Jamie Dimon here, CEO of J.P. Morgan Chase, mentioning that as we approach the deadline, a possible default on the U.S. sovereign debt is possible. And the closer we get to this, the more panic there will be in the form of stock market volatility. And I'm thinking it would also impact the bond market as well. So this is, I guess, something that maybe the market is now going to be talking about. This is one of the first sort of major headlines I've sort of seen on this, on the front page of CNBC and stuff. So keep an eye out on this. Financial media will probably be discussing this a lot in weeks and days to come. Looking at the equity markets, we've been mentioning that there's been this range that has been in play, and we've just been patiently waiting for a breakout on either direction. Well, the S&P 500 still in that range. Really nothing going on here. And sometimes, well, most of the times, I do tell traders, look at those larger time frames, right? Look at your weekly time frames, just because they give us really, really good areas of support and resistance. And you can see here on the S&P 500, pretty much where we're at, just around that 4,200 zone, has seen multiple support and resistance touches in the past, and is a very strong resistance level, right? So resistance is an area where usually buyers will, take profits, and subsequently where short sellers will be looking to jump in with their stop losses just above that major resistance level. And you can sort of see that this range, the resistance is right there, and we are just battling at that zone. So for the S&P 500, we can't really say anything until we get that breakdown. But judging by how major this resistance zone is, you can tell why, or you can maybe, I guess we can sort of speculate on why the sellers might, take charge here with some of these headlines that are coming out. If we look at the Dow Jones, again, same sort of range pattern. We also had that major resistance, just like the S&P 500 at around 34,400. Which never broke out. And once again, go to your weekly charts, change your candles to your line charts and just connect the dots, see where you see the most support and resistance touches, and you can have your, your major support and resistance level there. So we have similarly a major resistance level that has to be broken above on the Dow Jones. And then if we take a look at the Nasdaq, a bit more room, to the upside, you can argue, as we approach a major resistance zone around that 13,600 zone. And if we go to the daily chart, the Nasdaq is indeed what I would say the more bullish of the charts for sure. Yes, very, very long range as well, but we have had a breakout above recent highs. So I think, the Nasdaq can maybe see a bit more of a push here higher. And of course, we are seeing some earnings maybe play into this with Alphabet or Google earnings potentially being a catalyst. I think Meta did quite well there as well. So maybe some of these tech earnings will be enough to give the Nasdaq a bit of a boost here. But of course, if any sort of risk-off sentiment comes back into the market where people are worried about things such as the debt default or regional banks, then some of these growth stocks will be taking a hit. So a bit frustrating, I know, for market people, but a lot of these indices, still in their range, very stubborn, in their range, just not giving us those breakouts. Over in Europe, you're sort of seeing something similar with the German DAX market with this range as well. UK FTSE had a bit of a nice pop, but recently hasn't really been riding on that momentum. The French markets I find a bit interesting given what's going on the streets of Paris, but we had a major breakout into new all-time record highs on the French markets. And technically, I think this is an interesting one just because now we are testing the previous breakout zone. So for traders out there, maybe this is a market to play as we do, or as we see a retest here of what used to be resistance, now as support. You can even see that there's a bit of a play channel pattern here as well. Looking at the bond markets, the 10-year yield, again, very, very choppy, right? Very, very choppy price action here, just holding above this 3.3% range. Same thing here with the 2-year short-term yields here as well. So, just a lot of uncertainty, a lot of ranges in all these markets, and they all are interconnected. So we're just waiting for some sort of break to give us, the sense of direction. U.S. dollar, same thing, something we've highlighted in the past year. We talked about this engulfing candle way back in mid-April, saying this could be start of a new uptrend. It hasn't really done much, but for technical traders who are bullish on the dollar, they probably are long the dollar with their stop loss just below this large engulfing candle. And, they're technically still in the trade. So we are seeing a bit of a bounce here in the US dollar. I would be watching this just because of how long it's been in this range now. And, the longer the range develops, especially if it's in a downtrend, it is more likely we are going to see a reversal because it just shows an exhaustion of the trend, right? So in this case, the downtrend, and you could say the same for the U.S. market, right, where we had a bit of a uptrend and now we are ranging, which might indicate more downside pressure. Gold, just choppy against the U.S. dollar, very close to making or printing new record all-time highs, although I'm still liking it here above 2,000. We'll have to watch what that US dollar is doing because that will put some pressure on the precious metals, just as it is here on silver, which is having a very, very bad day, breaking back below 25 and also now looking to maybe break below this support zone here around the 2420 zone. And then finally, the oil markets. And I think this is one that interests me because oil obviously can be seen as, copper and oil to be seen as these leading indicators for a recession or an economic slowdown. And it does look like oil, after a brief pop and a bounce above 64 here, is looking to resume the downtrend as it hits a resistance level. And this is something you can see I have already marked down for my intraday trades. And yes, we are seeing a nice breakdown here on the intraday charts. So this looks like one which has some more room to the downside. So I'd be watching a big move lower here in oil, which could play a role in, of course, the Canadian loonie as well, which subsequently is also testing a major support zone against the U.S. dollar here. So with oil heading down and the U.S. dollar getting stronger, perhaps we'll see traders play this nice bounce here in the U.S. dollar Canadian. But that's it for me, folks. I know this is maybe not exciting to hear, but this is just what I've been seeing on the technical charts, and I'm sure many of you have been seeing as well. I know there's a lot of frustrated investors and traders out there just saying, hey, where are these markets going? It looks like all these breakouts have happened, but we just aren't seeing that momentum higher. And I tell people, look at those lower weekly charts, are very close to major resistance zones or flip zones on the indices. And until we can break above that, I can't really say I'm very bullish on these markets as of now. So again, I know there's some frustration, but sometimes the best thing to do is just to be patient and have your cash ready to deploy when we get the opportunity. That's it for me, folks. If you enjoyed the video, give it a thumbs up. Be sure to follow us and let me know in the comments below if you think we are going to break out or if we are going to break down here in the market. I really want to see what people are thinking. Perhaps we can have a bit of a poll here as well, just to see what the sentiment is with the retail crowd. Anyways, folks, I'll catch you guys all in the next chart attack.